following is a paid program. Talk 103.7 WTIP and Cable Channel 7 welcome you into Financially Speaking with Jim Taunton. Find us live on radio, TV, the IPX Media app, and on YouTube. Just search Financially Speaking NC or get the link at WTIPFM.com. The opinions expressed in this show are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities and investment advisory services are offered through Genoa Wealth Management Incorporated, member FINRA SIPC. Now, here's your host for Financially Speaking, certified financial advisor, Jim Taunton.
Welcome to Financially Speaking. Jim Taunton here, your host for the next 30 minutes. And live shows have been few and far between the last month and a half or so, between holidays and sickness and more sickness. It's been tough. You'll be able to tell I still got a little congestion, but I don't feel bad, so glad to be here. And I'd love to talk with you about something you feel is important to you, important enough to pick up the phone and call me with a question. That would be a wonderful thing. The number here is 561-TALK, 561-8255. And if you call in with a question, as always, your name goes into the drawing for the dinner for two at Ottabola. I'll even pay the tip. It's a wonderful place to eat. I eat there at least once per week, sometimes twice. So give me a call and get yourself a chance to win a dinner for two. Again, I'll even pay the tip. So let's go to about a 2-minute break. And then we'll be right back. Call during this break, and we'll take your call first when we come back.
Aiden Golf and Country Club invites you to become a member. Come tour our beautiful clubhouse, ballroom, and facilities. For a quality golf experience, sign up for our discounted special membership rates, low monthly dues with no quarterly food minimum or assessments. Folks love to play golf at Aiden Golf and Country Club. Cool off at the pool all summer. Enjoy excellent food and beverages from the snack bar. Even store your own cart, unless you like to walk. Call 746-3389 for special limited membership rates at the Aiden Golf and Country Club.
My practice has been built on accessibility, responsiveness, and a willingness to be proactive for my clients. I'm not afraid to make recommendations relating to your investments and planning. I do hope all of your financial decisions are good ones, but let's not rely on hope. Let's roll up our sleeves and get to work.
Jim has attained 3 professional designations: Certified Financial Planner, Chartered Life Underwriter, and Chartered Financial Consultant, which entails 20 courses of study with examinations and a comprehensive national board exam, administered by the Certified Financial Planning Board. Jim has been practicing in financial services since 1979, which includes investing, planning, and insurance to help you meet your financial goals. Among the many awards Jim has received in his career is his selection to the Guide of the Top Financial Planners by the Consumer Research Council of America. So if you want to work with someone who is working for you, call Jim at 756-4700 or email him at planning@financiallyspeaking.com. That's 756-4700 and planning@financiallyspeaking.com.
Welcome back to Financially Speaking. Jim Taunton here. I take it we did not have a caller during the break, but you interrupt the monologue anytime, please. If you have a question, love to talk with you. Number is 561-TALK, 561-8255. In case you didn't know it, it is cold. It's colder than a well digger's butt tonight. I mean, it is really, really cold. Matter of fact, I told someone today several times that today is probably going to be the coldest day we have this year, 2025. And it may be the coldest day that we've had in a decade. I mean, I don't remember, obviously, every day we've had, but it doesn't get this cold in Greenville, North Carolina. It has been miserable. If you know me, you know that if it gets below 80 degrees, I'm chilly. Yes, I don't like cold weather. I am cold-natured. I run a space heater in my office from November to April, almost nonstop, and sometimes in the summer when the air conditioning kicks on. So there you go. And I'm not ashamed of it. Take my man card, if you will. But in any case, I'll be glad when this cold weather gets out of here. You know, the cold weather, I've always despised cold weather, but there's so many things wrong with it. But one of the things is sickness is like tenfold in cold weather. It's just ridiculous how the germs spring up and people's immune systems diminish in the cold. And man, it's been a sickly month and a half to 2 months in my family. I know that a lot of folks have been sick, and it's hard to get rid of it. I hear that so many people this year, whatever it is going around, it just sticks with you and comes back. It looks like it goes away and then comes back. Enough of that. That's kind of depressing. All right, I've got one case study for you, which is talking about a real-life case, real-life client. And then we're going to talk about some other things related to markets and economy and what have you. But again, anytime, pick up the phone and call me. Interrupt the monologue, please. 561-TALK, 561-8255. All right, I met with just a very, very nice couple this week. And this couple had met with another advisor who will go nameless, of course, and the couple will go nameless. And they just were told some things that didn't sit well with them, and they wanted a second opinion. How brilliant was it of them to seek a second opinion? And you should do the same. Even if I give it to you, maybe seek a second opinion. It's always good to have a second and third opinion. And I'm telling you, I believe I'm going to save this couple from making some pretty large mistakes based on what this advisor was advising them to do. It's just ridiculous, the advice that he was giving them. And I'm going to tell you three of the things. There was more, but there were three things that I remember in particular that the advisor had recommended to them that were just so far off of what they needed to do. I mean, this couple's in their 50s. They're still in growth mode. They're still trying to accumulate money for retirement. And that's, what we want to do. But let me give you the three things and see if you agree with me. This advisor recommended that they move all the money from a brokerage account that they have owned and invested in to a fixed annuity. Now, let me tell you, I'm not anti-annuities. I'm not anti-fixed annuities. We have used fixed annuities in our practice. I have used variable annuities in our practice. There are some kinds of annuities I don't use in my practice because I don't like them for various reasons. If I meet with you individually, I would share that with you. But, so I'm not anti-annuity. But in this case, they've got liquid money in a brokerage account that's invested. They're in their 50s. They're trying to grow money for retirement. Why in the world would you recommend to someone to move that money to a fixed annuity? And on top of everything else, when you're under 59 and a half and you make a withdrawal from an annuity, you have a 10% penalty. And of course, you're taxed on any gain first that occurs in an annuity because it's taxed on a LIFO basis, last in, first out. But 10% penalty. And a fixed annuity, although it's good in certain situations, for them, they're trying to grow money. We need market returns. Fixed annuities are not going to pay market returns. They're just not. We've had a period here of about a year and a half where fixed annuities had extraordinarily high rates. But those rates have already begun to come down, and they will continue to come down. It just makes no sense whatsoever. That terrible advice there. Terrible. All right, secondly, this individual advised him to purchase, and he used a number, like a tax code number for this type of plan that he thought that they should put money into and to subsidize retirement. And when you do the research, you'll see that this number that he gave them for the plan is nothing more than life insurance. I am not anti-life insurance. I do believe that as people get older, most people outlive their need for life insurance. And certainly over time, the need for a death benefit diminishes as your assets build. But certainly in your 50s, you don't want to start a new life insurance contract for the purpose of accumulating money for retirement. No. Bad idea. All right, number 3. This advisor told him that they were going to need to continue to work in retirement. And I mean, we haven't completed the financial plan. They're still gathering the data because I wanted to start from scratch. I didn't want to use what somebody else had done. But based on just a cursory look at the numbers that I've seen, they certainly are not going to need to work in retirement. They can, if they choose to make additional monies to subsidize their retirement and maybe to help them have to withdraw less from their invested assets. But they're not going to have to work in retirement based on what I'm seeing. We will find out for sure. But the amount of income that he mentioned to them that they were going to have a shortfall of it was just ridiculous. No way. 3 strikes and you're out, buddy. 3 strikes. That advisor is going to hit the road, Jack. Just that simple. We shall see what comes of it. All right. Now, information. Let's see, what time is it here? Yeah, let's talk a couple of minutes and we'll go to the next break. Trump has really been pushing the last day or two at the conference that he's at for lower rates. He actually used some very strong language. He said he was going to demand that they lower rates. Demand. Strong word. He also didn't say demand, but he strongly urged the Saudis to lower oil prices. Now, that not only would help, the West have lower gas prices, it'd be like a tax cut, essentially, but also, and he mentioned this too, he said if they lowered oil prices, the Ukraine war would end very quickly. And why is that, Jim? Why is that related? Well, a large part of Russia's GDP comes from selling their oil. If prices go down on selling their oil, on the oil they're selling, they will not have resources to fund a war. And they would have to remove their troops and go home. So I thought that was pretty smart. He also is asking that other NATO members, and he did this the last time he was in office, if you recall, and he put the hammer down. I mean, he said, you pay more of the cost of NATO or we're out. and he wants them to have at least 5% of their GDP going to defense, including NATO. So basically, he's saying the United States is tired of being used and abused around the world. You know, we have limited resources also. We don't have unlimited resources. And we're tired of fitting the bill for everything that goes on in the world that needs money. So whatever you think of Trump, personally, okay, you know, some of these things need to be said, and these policies, I think, are going to be good ones, ultimately. The number one fiscal policy in the next few years that will affect markets is tariffs. And you've heard about tariffs. I don't believe that Trump is looking to implement tariffs on a large-scale basis. I don't think he's looking to put 25% tariffs on any one country. He's talked about that, but it's talk. That's his negotiating style. He puts pressure on people so that they come to the table and make concessions. And I don't believe he's intending for these tariffs to be a permanent thing either. It's a stick. You know, it's not a carrot. It's a stick. And what he wants, and he's threatened Mexico and Canada with tariffs. And the reason for that threat is he wants both of those borders to be strengthened. He wants drugs to quit flowing across the border. He wants illegal immigrants to quit flowing across the border. And he's using tariffs as a weapon to cause them to do what's right, essentially. Now, he's also threatened China with tariffs, and it's a totally different reason. That he probably will implement tariffs on China, and it's simply to create a level playing field with China. We haven't had a level playing field as far as trade and GDP, the world economic system, in forever, because their government controls all the companies. They control wages, they control everything about them, so they can cheat, essentially. And, you know, the United States basically is saying, we are tired of that. Let's see. Yeah, China level play. I've already done that. Good. All right, now, moving on. I've made a lot of notes here, but they're just all over the place. I've listened to so many webcasts, and I make notes on the webcast, but some of them duplicate, and my notes are pitiful, but I'm going to use them, trying to read them, actually. The report last week on CPI was lower than expected. That caused the market to go up a little bit. But the real reason is that lower CPI leads to a lower PCE, which is the Fed's preferred inflation gauge. So it looks like that, and what I heard from I'm on a number of webcasts during a week, a bunch. And these people, manage billions. They have lots of resources that I don't have. And they're saying that inflation is going to continue a steady decline throughout 2025. That's a good thing. That's very, very bullish for all markets. Most of these people that I'm listening to are saying that the American economy is extremely strong. It's going to get stronger. The American economy will lift the whole world in its wake. That's how strong our economy is. they also predicted the dollar's been strong for a while. It's going to continue to get stronger, and that will also lower inflation. Why, Jim, is a strong dollar good for inflation? And first of all, what does that mean, strong dollar? When we have a strong dollar, that means that United States citizens can buy more foreign goods with their dollar. When you can buy more goods with your dollar, that's going to lower inflation in the United States. All right, let's talk a little about NVIDIA. I've talked about NVIDIA a lot on this program the last 2 to 3 years, actually. I brought NVIDIA to you probably 2.5 years ago. Sure did. And it's just gone through the sky since then. But Biden has had a restriction on NVIDIA chips. There are like 18 allies that they're allowed to sell their best chips to, but they can't sell their best chips to China and some other places. And China is certainly a large customer for technology. Now, everyone believes that those restrictions are going away. Trump wants NVIDIA to prosper. He wants the United States technology industry to prosper. He wants our chip makers to prosper. Chip making was invented in America. Now, most of these chips now are made overseas, but chip making began in America. And we are way ahead of the world, way ahead of the world. We have a wrong, in a large way, we have a wrong opinion of ourselves and the world. We for some reason, we just think that the Chinese are smarter than we are. I mean, most of us do. Think about it. Most of us do. We think the Germans, have some intellectual advantage over us. It's not true. The United States is ahead of everyone as far as innovation and technology. But NVIDIA has a 1-year backlog in orders for their Blackwell chip. So if the Biden restrictions are removed and they already have a 1-year backlog for their chips, whew, Katie bar the door for NVIDIA. All right. So up until now, short-term rates have been coming down because of the Fed, but long-term rates have been going up, which is an interesting anomaly. I don't believe that will continue. So we have easing financial conditions. And in 2025, most of these people that I'm on these webcasts with believe that rates will continue to come down, inflation will continue to come down, the dollar will continue to strengthen, labor will continue to strengthen, earnings will continue to go up, equities are going to continue to go up, bonds are not going to perform as well as equities. So everything I'm hearing from these people says you need to be in stocks, not bonds or fixed income. All right, we need to go to a quick break here. Good heavens, I'm almost at the end. Nah, let's just not go to another break, Dom. And I'll just talk right to the end, if that's all right. Yeah, of course it's all right. I pay for the 30 minutes. Kind of do what I want to. All right. We've had a record time, by the way, in an inverted yield curve. Most time the yield curve inverts and very quickly, within months, it's back to being what it's supposed to be, which is lower rates on the short end and higher rates on the long end. But we've had an extended period of an inverted yield curve, and yet no sign of recession, no one that I hear that has any credibility whatsoever believes that we're going to go into a recession in the near future. Not going to happen. We have definitely had a soft landing in our economy. There's no stress in the financial system currently. The banks are in good shape. Evaluations right now in the stocks favor the mid and small cap. They're about 20 times earnings. The PE ratio is like 20 times. Whereas with the larger companies, especially the very largest companies, and especially the technology companies, we're looking at an average PE of 34 times. So mid and small caps are definitely cheaper by that metric. So, mid cap may be something that you need to increase in a portfolio, but take that to your financial advisor and talk to him or her about it. Don't act on what you hear on this program. This is not advice. This is just information. But if you'd like to talk with me, I'd be glad to do that too. My number at the office is 756-4700. 756-4700. I'd love to sit down with you. First meeting with me is at no cost or obligation whatsoever. My email is jim@jtauntonfinancial.com, and you can see my name over my shoulder there. And my website is jtauntonfinancial.com. So that's all you need to get a hold of me. They also believe real estate is going to appreciate in value. So real estate investment trusts, real estate mutual funds should also outperform. The only way, and I'll end with this, the only way that I see a correction, which is a 10% downturn in stocks, the only way that's going to happen is if the Fed pivots on their policy and begins to tighten rates, go up on interest rates. In my opinion, barring some other unforeseen thing that we can't possibly foresee, that's the only fundamental metric that I see that could cause stocks to have a little blowout and maybe have a 10% correction. Certainly don't see a bear market on the horizon, but 10% corrections usually happen every year, but we haven't had that for a while, and I don't see that this year, to be honest with you. So the bottom line to all this information, I've used a shotgun approach. I've given you just a little bit from so many different areas, sectors, and parts of the economy, what have you. But bottom line is, you need to be invested. You need to be invested. If you're in growth mode, you need to grow your money. You need to be invested, and mostly in equities, a good diversified stock portfolio, exactly what you need. So there you have that. And if you'd like to talk with me again, call and schedule an appointment. Area 252-756-4700. Got music in my ear means I've run out of time. And as always, this is Jim Taunton helping you make all of your financial decisions good ones. Good night, everybody.